Chris Berlet, mining engineer, CFA charter holder, to discuss the Energy Transition Metals Fund and the high transparency, high integrity, values-based investment approach that allows us to outperform broader markets over the medium and longer term. So there's three key drivers of outperformance for the fund. Two are global macro related, and the third derives from our proprietary portfolio models. So for the first two, the global macro related drivers, the first one is declining availability of finance for metal exploration as a result of the advent of metal and mining ETFs in 2004. The second is this decline in finance availability occurring against a backdrop of increasing metal demand as a result of the intense metal requirements for the energy transition itself. So today there's $28 billion in 114 metal and mining managed funds worldwide. By comparison, there's $330 billion in metal and mining ETFs worldwide. So metal and mining ETF assets exceed by more than an order of magnitude metal and mining managed funds. Growth in ETF assets has come at the expense of investment in metal and mining managed funds and at the expense of investment in metal exploration. So declining availability of finance for metal exploration. All Western nations today provide lists of critical minerals, which outline the metals and minerals deemed critical for their national security and economic development initiatives. Energy transition metals are front and center on all of these lists, confirming their importance to national security and economic development. Supply chain resilience is a central theme across the critical mineral complex. So increasing demand for critical minerals, for national security, and for the energy transition requirements. So the third driver of outperformance for our fund is the proprietary portfolio models. We model 114 metal and mining managed funds worldwide, and we note that their investments have longer portfolio hold periods, lower portfolio turnover than standard equity portfolios. This is because the investment managers invest with exploration companies that take time to execute on their exploration strategies. The disclosures for these funds, however, are governed by the laws of mutual funds and SICAVs. So we gain comparative advantage by modeling these funds and determining which companies they're increasing their allocations to, which they're divesting from, and by observing any new names to a portfolio. When we combine this market intelligence with supply and demand fundamental analysis for metals, focusing particularly on the metals required for the energy transition, and also financial statement analysis, and also we model the exploration assets held by the companies, and we consider the track records for managers of the investee companies, focusing particularly on integrity and commitments to ESG practice. So in summary, the metal exploration sector requires high transparency, high integrity, values-based investment approach, practice, in combination with the highest standards for ESG investment. So this investment process, in combination with our three key drivers of outperformance, allow the Energy Transition Metals Fund to outperform broader markets over the medium and longer term, while investing for new supplies of the metals deemed critical for national security and the energy transition. Thank you.